So after a few days, I am again in your class. Can you remember the discussion we had in the last class? Any idea about the discussion in the last class?
We have the idea of definition, that is, you have given us a synopsis.
Okay. So I actually asked you to go through the definitions, especially the important definitions which will be needed in your career. These are all needed for passing the examination and to practice. So if you do not know the definitions properly from the Income Tax Ordinance 1984, then you won't be able to make people understand who will be consulting you on some occasions. So let us see the important definitions. I believe that you have gone through the definitions under section 2 of the Income Tax Ordinance 1984. So if you have already gone through that section, I believe that you have been able to understand about the definitions. So let us have a quick glance at the important definitions, starting with alphabetical order. So you know that all the definitions are given under section 2 in alphabetical order. That means starting with the alphabet. So first of all, we will have a glance at annual value. I probably discussed this in the previous class as well, but again, for today, I will also be discussing all these definitions. Annual value, it's always, you should remember that this is in relation to a property let out. It is not in relation to a property where you are staying and not being let out. So always remember that this is in relation to property let out by you to others. So this is the value for which the property might reasonably be expected to let from year to year. You have to remember this definition. That means the annual value will vary from year to year. It is not stagnant over a number of years. Since this is not stagnant, it will vary and it will be estimated or determined by the Deputy Commissioner of Taxes after submission of the return. So you will show a value which will be treated as rental value. So you are getting some rent from a particular tenant, and with this rent, you can fill in the return showing the net income from the house property under section 24. But this cannot be always accepted by the Deputy Commissioner of Taxes. So when the Deputy Commissioner of Taxes that the taxes thinks that the value you have shown is not the actual annual value of the property, you have shown the rental value. So rental value may not be the annual value as determined by the Deputy Commissioner of Taxes. So rental value and annual value are not the same. So when rental value is accepted by the Deputy Commissioner of Taxes as annual value, then it is annual value. Sometimes Deputy Commissioner of Taxes may think that the rental value of the building or the apartment is, say, for example, 60,000 taka. He thinks like that. And you have shown the rental value at 70,000 taka in your return. So in this case, the rental value which you have shown is beyond the or more than the value estimated by the Deputy Commissioner of Taxes. So the annual value which the Deputy Commissioner of Taxes determined was 60,000, but you have shown it at 70,000. So in this case, what will happen? When the rental value shown by the SSC is more than the annual value estimated by the Deputy Commissioner of Taxes, then the rental value will be treated as the annual value of the property. So here, the decision is the deputy commissioners. But since you have shown the rental value more than the annual value estimated by the deputy commissioner of taxes for the property let out, in that case, the annual value would be the rental value. But when annual value is rental value is less than the annual value, then annual value will be fixed or determined by the deputy commissioner of taxes. In this case, you should remember one thing: sometimes the accommodation must be furnished, or sometimes it is unfurnished. So when it is unfurnished, it's the value of the apartment or building. But when it is furnished, then the value of the apartment plus the value of the amenities, that means fridge, refrigerator, then television, LED, bed sheet, sofa set, etc. The value of all these, that is the rental value of all these, will also be included in the annual value of the property. So when you will calculate the annual value of the property, you will calculate annual value of the space plus the annual value of the amenities available in the apartment. So including all these, you will have an annual value, and that will be determined by the deputy commissioner of taxes for calculation of income from house property under section 24. So you have to remember that the income of the house property will be calculated under section 24. So these are the things you have to remember here, and there might be a question with regard to the annual value, with regard to the calculation of the annual value, rental value, and the calculation of income from house. Okay, let us come to another definition. It's the appellate joint commissioner of taxes. So if you are asked who the appellate joint commissioner of taxes is, you must have an idea about him, who he is. So it means a person appointed to be an appellate joint commissioner of taxes under section 3 of the Income Tax Ordinance 1984. And this appellate joint commissioner of taxes also includes appellate additional commissioner of taxes. So if there is an appellate additional commissioner of taxes, he is also the person included in the definition of appellate joint commissioner of taxes. And another person should also be included in this definition, a person who is currently holding the charge of an appellate joint commissioner of taxes, but actually he is not an appellate joint commissioner of taxes. He will also be treated as an appellate joint commissioner of taxes. It means that that fellow is not yet promoted to the rank of an appellate joint commissioner of taxes, but he is currently holding the charge of that. So in that case, he will also be treated as an appellate joint commissioner of taxes. So three persons you have to remember in your mind who are appellate joint commissioners of taxes. Then come to the definition. Appellate tribunal means the taxes appellate tribunal. When we say appellate tribunal, it means the taxes appellate tribunal. It is established under section 11 of the Income Tax Ordinance 1984. So a tribunal is a body consisting of some members, including a president. There must be a president of the tribunal, and there are other members in the tribunal. So all these people, they are the judges, and they will hear the appeals preferred by the SSC. SSC means the taxpayer, and also by the Deputy Commissioner of Taxes, in order to protect the revenue. Because when there is an appeal preferred by the SSC to the Appellate Joint Commissioner of Taxes, and the verdict goes in favor of the SSC, then the government loses. That means the Deputy Commissioner of Taxes loses. So in that case, the Deputy Commissioner of Taxes can also prefer an appeal to the appellate tribunal. So both cases, the taxpayer can prefer an appeal, and the Deputy Commissioner of Taxes can also prefer an appeal. So both ways, they will be hearing the appeals preferred by any one of them. So president is the chief of the body, and there are other members, maybe 1 member, 2 members, 3 members. So jointly they will take a decision, and the majority of the members will be granted. That means when a decision is given, and if 2 members agree on a particular point and 1 member doesn't agree, it does not mean that the decision will be in favor of the person concerned who is not agreeing to that proposal. So the majority of the members would give a decision, and that will be accepted, and that will be sent to the Deputy Commissioner of Taxes for amendment. The assessment order would be amended, and it might be in favor of the SSC or against the SSC, whatever it is. So Appellate Tribunal, you can say that that is the last forum for preferring an appeal. So after that, there is no forum for appeal. But there is a addition that if you have any law point to discuss, you can prefer an appeal before the High Court division of the Supreme Court of Bangladesh. But if you do not have any legal point to discuss or legal point to seek from the judges of the Supreme Court, then Appellate Tribunal will be the last forum before which you can prefer an appeal. So for factual matters, Appellate Tribunal is the highest body. So can you understand what the factual matter is and what the legal matter is? If there is a law point, whether residential status, which has been determined by the Deputy Commissioner of Taxes, is as per law or not. If you think that the residential status as determined by the Deputy Commissioner of Taxes is not correct or is not actually legal in the eye of law, then you can go to the High Court division of the Supreme Court. This is a legal point. But if you have something like estimation of sales made by the Deputy Commissioner of Taxes was Taka 1 crore, but you have shown your sales at Taka 50 lakhs. So this is a factual matter. And if it is increased, while you have shown your sales at Taka 50 lakhs, and the Deputy Commissioner of Taxes has increased it to Taka 1 crore, it means that you have to pay taxes on a higher amount of sales. So in that case, you might be aggrieved with the decision of the Deputy Commissioner of Taxes, and in that case, you can prefer an appeal. And for this kind of appeal, the Appellate Taxes Tribunal would be the highest forum, because you cannot go beyond that forum, since these are all factual matters. So I believe that you have understood when you will be going to the High Court division of the Supreme Court, and when you can go to the Taxes Appellate Tribunal as the last forum. So that is a matter of consultation for the SSCs, because an SSC can come to you and can tell you whether I can go to the High Court or High Court division of the Supreme Court, or I should go to the tribunal for the last forum or as the last forum. So the decision will be given by you after your explanation to the SSC. Okay, then come to another point. Approved gratuity fund means a gratuity fund which has been and continues to be approved by the board in accordance with the provisions of Part C of the Part First Schedule. So it means that approved gratuity fund, there is a fund for the employees where you can have gratuity after your retirement or at the time of your retirement. So this should be approved by the board. Board means in this case the National Board of Revenue, and the um, approved gratuity fund should be run or should be approved or should be made according to or with the provisions of Part C of the first schedule. You can go to the first schedule, Part C, and you will be able to understand how the approved gratuity fund will be created, how it will be run, how it will be approved by the board, how to apply for approval, etc., and how to maintain it. So all these provisions are there. So you should maintain the approved gratuity fund in that way. Okay. Then approved superannuation fund. This is another definition. Approved superannuation fund or a pension fund. It might be more or less similar. Pension fund means a superannuation fund or a pension fund which has been and continues to be approved by the board in accordance with the provisions of Part A of the first schedule. So this is also to be approved by the board, means the National Board of Revenue, and the provisions are given in Part A of the first schedule. So you have to go to first schedule and Part A. So you will understand how a pension fund is created and how it is maintained and what are the provisions that should be, complied with, and it should be approved by the National Board of Revenue. So these are actually needed in an organization. When you are working with an organization or a company, then you can create all those funds in the interest of the employees, because employees should be given some benefits at the time of their retirement. And this is actually needed for them because at the time of retirement, they will have some benefits from the employer, which could be helpful for the family. And then come to another important definition, which is SSC. SSC means taxpayer, and it means a person.
I couldn't hear you properly because the network is slow, maybe.
Sorry.
We couldn't hear you properly because voice is network.
Can you?
Yes, I could not hear you properly. The network is slow. Maybe network disturbing. Maybe I don't know, but I don't know my network is slow or your network is slow.
Can you speak a little bit loudly?
Sir, I couldn't hear you properly because I don't know whether your network is slow or my network is slow. Yeah.
Oh, that is also not understandable to me because I am speaking more or less loudly so that you could easily understand me. But the network might be having some difficulties. It might be like that.
Now it is okay.
Okay?
Yes.
Okay, if it is okay, fine. All right. Then I was talking about SSC. SSC means a person who is paying taxes to the government or by whom any tax is payable under the Income Tax Ordinance 1984. So if a person is supposed to pay taxes, he is an SSC. If a person who is supposed to get some refund from the Income Tax Department, he is also an SSC. A person who has been penalized by the Income Tax Department for his fault of submission of the return, so he is also an SSC. So there are some conditions when you will treat a person to be an SSC. So what are the conditions? The conditions are every person in respect of whom any proceeding under the ordinance has been taken for the assessment of his income or the income of any other person in respect of which he is assessable, or of the amount of refund due to him or to such other person. I explained it to you, but again, it's the same thing which has been said here. Person against whom any proceeding has been taken under this ordinance. So proceeding might be taken by the Deputy Commissioner of Taxes for his default, for non-submission of the return, for penalty imposed upon him, or this person could be liable for assessment of his own income. He could be liable for assessment of another person's income, or he could be entitled to having a refund under this ordinance. So if I ask you, when a person is responsible for assessment of anybody else's income, when? Do you have any idea about that?
Can you repeat the question, sir, again?
Question is, we generally understand that when you have income, you have to pay taxes. So this is your income and you have to pay taxes on that. This is the general understanding. But it is said here that a person who is responsible to pay taxes on behalf of any other person, or the person is accessible for income of other people, then when such a situation could arise? That is my question.
Sir, here I can understand the person.
Huh?
Here the person means the minor. If he has any son or minor,
Okay.
if he has or any son or something else, if he is under 18, then his father is responsible for his tax.
Okay, for the income of the minor, yeah, he is liable to pay taxes. But if there is an income of his father who has died, then he is the legal heir of his father. Then he is also liable to pay taxes for the income of his father. So these are the cases when a person is liable to pay taxes on behalf of others. Then another provision is that every person by whom a minimum tax is payable under this ordinance. So when a person is liable to pay a minimum tax under this ordinance, he is also an assessee. Okay, then every person who desires to be assessed and submits his return of income under this ordinance. So every person who desires to be assessed. When you desire to be assessed, what are the conditions or what are the circumstances under which you desire to be assessed? Any idea about that? Anybody?
No, sir.
Okay. Let us suppose that you want to participate in a tender in an office. You want to supply some items, supply some stationeries or other equipments amenities, etc. to the office. Now you want to participate in the tender process, but you don't have any income. For the first time, you would like to join or participate in the tender. Now what will happen to you? You need to have a TIN certificate. You need to have a tax clearance certificate. But how would you do that?
Okay.
Only option is that you can submit a return showing some income, and that should be accessible, and the Deputy Commissioner of Taxes will assess it and give you a tax clearance certificate after payment of taxes by you. So then you submit the tax clearance certificate to the organization where you want to participate in the tender process. So it means that you desire to be an SSC, and that's why you have submitted the return showing a particular income, and you have paid taxes on that income, and it has been assessed by the Deputy Commissioner of Taxes. So in this situation, we can say that you have desired to be an SSC. Another example could be given in this issue when you want to apply for a piece of land to be allotted by Rajuk, Rajdhani Unnayan Kartripaksh. So if you want to apply for a piece of land, you need to submit a tax clearance certificate. Even if you don't have your income, but still then you can submit the return showing some sort of income, and in that case it will be assessed by the Deputy Commissioner of Taxes, and afterwards he will issue you a tax clearance certificate. In that case, you would be able to submit the application along with the tax clearance certificate, which is needed for you in order to be allotted a piece of land by the Rajuk. Under both the cases, as I given you two examples, one is taking part or participating in the tender, another is applying for a piece of land from the Rajuk. In both cases, you may be desiring to become an SSC. So that is for your understanding. Then every person who is deemed to be an SSC or an SSC in default under any provision of this ordinance. So you are deemed to be an SSC. That means the Deputy Commissioner of Taxes thinks that you are an SSC, but you haven't shown your return. So he can issue a notice on you, asking you to submit the return. So in that case, you would be deemed SSC when the notice is served on you under section, say, 93. 93 means you have some sort of income and you haven't submitted the return. So meaning that you have concealed the income or you have tried to avoid the income. It is not avoidance, but rather this is concealment of income. So in that case, a notice should be served under section 93, asking you to submit the return showing the actual income you have earned. So all these are the situations under which a person could be treated as an SSC. So you should remember all those. And now come to the definition of assessment year. What is an assessment year? Generally, the period of 12 months commencing on the first day of July every year, and includes any such period which is deemed under the provisions of this ordinance to be the assessment year in respect of any income for any period. So generally what we understand, this is a period of 12 months starting from the first day of July every year, and it will be ending on the 30th day of June next year. But it could include any other period if you have income, meaning that when you are going away from Bangladesh, say for example, you are a foreigner, you stayed in Bangladesh, you are treated as a resident, and you had some sort of income here. Now you are leaving Bangladesh, and your income year, which has ended on the 30th day of June, it will be extended by another 2 or 3 months, because you are leaving the country at the end of September, say for example. So another 3 months would be added to the income year in order to make an assessment for you as you are leaving the country. And when you are leaving the country, you have to produce a certificate. And that certificate will say that you have been assessed here up to the period of your stay, and now you will be living for another country, and you have paid taxes in full, and now you are allowed to leave this country. So in this situation, the income year could be an extended period, not 12 months, but generally this is a period of 12 months. Okay, then come to the next definition. Assistant Commissioner of Taxes means a person appointed to be an Assistant Commissioner of Taxes under Section 3 of the Income Tax Ordinance. When the appointments are made, you should remember that the appointments are made actually under Section 3. And he is a person appointed to be an Assistant Commissioner of Taxes. So you should remember this. The next definition, Bangladeshi company, means a company formed and registered under the Companies Act 1913 or the Company Ain 1994, and includes a body corporate established or in force in Bangladesh, having in either case its registered office in Bangladesh. So what does it mean? It means that a Bangladeshi company should be formed and registered under the Companies Act 1913, because the Companies Act 1913 was used in the British India, then in Pakistan, then in Bangladesh. So we have followed the Companies Act 1913, and there were some amendments, of course, remained the same. And afterwards, in 1994, the new Companies Act was enacted, and that is called Companies Act 1994. So under both the Companies Act, a Bangladeshi company could be formed, because when a company was formed in 1940, it was formed under the Companies Act 1913. And when a company was formed in 1997, that company was, we are following the Companies Act 1913 and 1994. So their registered offices should be in Bangladesh in both cases. And the Bangladeshi company should also include a body corporate established or constituted under any law for the time being in force. So any body corporate, that means a corporation which has been constituted by the government under any other law, not under the Companies Act 1913 or 1994, but under any other law. But that's the body corporate, and in that case, it will be treated as a Bangladeshi company. Okay, let us come to Sorry.
Sir, what does it mean, body corporate?
Body
don't
corporate. Body corporate means, say, any corporation, uh, like Petroleum Corporation of Bangladesh, when it was constituted. Jiban Bima Corporation, when it was constituted. Sometimes the company's banking act was not there, insurance act was not in prevalence. So body corporate was actually formed by the government. The government actually gave the required amount of capital. So it was owned by the government, but it was not a company like a company under the Companies Act 1913. So that was constituted under any other law. So in that case, it will be treated as a body corporate. Is it okay?
Thank you.
Welcome. But for the tax purpose or income tax purpose, it would also be treated as a Bangladeshi company because it has to pay taxes. So how to pay taxes? It will be treated as a Bangladeshi company. Otherwise, how can it be a person? How can it be assessed by the income tax authority? So that's why it will fall under the category of company. Because, in order to assess one's income, he or she should be treated as a person. Person in this sense, under the income tax ordinance, it has got a broad meaning. It's an inclusive definition. Inclusive definition means it will include so and so. That means a person could be an individual, a person could be a firm, an association of person, a Hindu undivided family, a company, a fund, an entity, a local authority, a body corporate, an artificial juridical person. All these are actually persons. So when I say person, it means that it might be an individual, it might be a firm, it might be an association of persons, it might be a company. So you must remember that a person includes many entities. Okay. So the body corporate should fall under company, under the category company, and it should be a Bangladeshi company. Okay. Next, come to the definition banking company. So there are companies, but there are also banking companies. Banking companies means those which are banks or non-banking financial institutions. So banking company Ain 1991. Any banking company should be under the Banking Company Law 1991 and includes a body corporate established or constituted by or under any law for the time being in force. For carrying on the business of banking in Bangladesh. So those companies, they should carry on the business of banking. So those will be treated as banking companies and they will be followed under Banking Companies Act 1991. Then you come to the definition board. Board means the National Board of Revenue, constituted under the National Board of Revenue Order 1972, Presidential Order number 76 of 1972. So you should remember that when somebody says board, it means the National Board of Revenue, which is constituted under the National Board of Revenue Order 1972, and the specific number is Presidential Order number 76 of 1972. You should remember. Then you come to another definition, which is business, and it is very important for you because if you earn income from your business, you will be assessed to tax. And generally, businessmen, they have to pay taxes, and we are imposing taxes on the businessmen. And we understand that the businessmen will be contributing to the exchequer of the government by paying taxes. So business includes, if you are asked to give a definition on business, then it should include any trade, commerce, or manufacture, or any adventure or concern in the nature of trade, commerce, or manufacture. So it should be a trade, it should be a commerce, it should be a manufacture. If you manufacture something, definitely you need to invest in that company, and you are producing particular items or particular products, and then you are selling them. So you are selling them at a margin, which is your profit. So this is sort of business or trade, whatever it is. So business includes trade, commerce, or manufacture, or any adventure or concern in the nature of trade. It should be commercially motivated. It should aim at making some profit, etc. So this is not donation. This is not actually free service. Rather, you are doing something with uh, motivation of earning profit. Then it will be treated as a business. And then you come to another point, which is called capital asset. Capital asset, why should we ascertain that this is a capital asset or not? You have an idea about that. There are assets, so many assets in the business. But why should we ascertain whether this is a capital asset or not? What would be the answer?
যে অ্যাসেটের আপনার ইউজ করে আমরা বিজনেস পারপাজে ইউজ হয়, বিজনেসটাকে বিজনেস পারপাজে ইউজ হয়, সেলের জন্য নয়, বাট 1 ইয়ারের বেশি যেটা থেকে আমরা ইকোনমিক বেনিফিট পাই।
Okay, this is Rabuka Sultana. Am I correct?
Yes, sir.
Okay. So it is used in the business for more than 1 year, you are saying. But what is the difference between normal assets and capital assets? Why should we ascertain whether this is a capital asset or not? What are the purposes for this? You are saying that the capital asset may be used in the business for more than 1 year. That is okay. I agree with that. But why do you distinguish between the two? What is the reason?
স্যার ওই অ্যাসেটটাকে তো আমরা বিজনেসটাকে রান করার জন্য ইউজ করি, ওটা তো আমরা সেলের জন্য করি না। সাধারণত আমরা কারেন্ট অ্যাসেটটাকে সেলের জন্য রেখে দেই বা আমাদের অপারেশনাল কাজ করার জন্য রেখে দেই বিজনেসে।
Correct. But that asset is not for sale. That is okay.
Yes, sir.
So that
Yes,
is
sir.
not part of the opening stock or closing stock.
Yes, sir.
Okay. But you are showing it in the balance sheet.
Yes, sir.
So it will have a longevity, maybe for a period of 10 years or 12 years or 20 years, whatever it is. Then what will be doing by you? What will you do for that? So you will be charging depreciation on that asset.
Yes, sir.
Isn't
Depreciation,
it?
sir. Yes, sir.
Yes. So you will charge depreciation in the profit and loss account. And
Yes,
why
sir.
is that? Why do you charge depreciation in the profit and loss account? What is the reason?
স্যার রিজনটা আমি বুঝে বলতে পারবো না স্যার।
Okay, since the capital asset cannot be utilized in 1 year. So you cannot allocate the full amount of the asset against the revenues. So what you are doing, you are charging a portion of it. You are calculating the longevity of the or lifespan of the asset. Now you are distributing the total cost of the asset over those years, say 10 years. So 10% should be charged as depreciation. So what does it mean? It is 1/10 of the total cost of the asset which you are charging against the revenue in a particular year, because this asset you will run for next 10 years. And the purpose is that you have to replace the machinery after 10 years. So you are charging that amount. It means that you are not spending that amount. It's not in cash, rather it is a charge. So this is not an expense. Depreciation is not an expense. This is a charge. Or you can better say, this is a conservator of fund. It means that you are making a fund with which you will be able to replace the machinery after a certain period of time or after the lifespan as you have determined for that particular asset. So that's why you are charging depreciation and you are showing the asset in the balance sheet. But what I discussed, why capital asset?
Because
Capital
of the
asset,
depreciation জন্য depreciation আপনার অ্যাকাউন্টিং এবং ইয়েতে ট্যাক্সেশনের depreciation আলাদা ক্যাপিটাল ইয়ের ক্ষেত্রে, এটাই ছিল মেইন ফ্যাক্ট স্যার।
no, that is also not the matter. Depreciation is different. In accounting, you will charge the depreciation, but sometimes it is equal to what the income tax authority accepts. But there are some percentages which you have to follow for income tax purposes. That is under the schedule. The schedule is given there, and you will find for which asset you will charge the depreciation. Maybe for building it is 10% or 20%. It has been prescribed in the schedule. So you have to understand what percentage you have to accept. You can follow the same percentage or you can follow another percentage, but income tax authority will be allowing the definition as per their prescribed schedule. But the purpose why I am saying this capital asset, it's because of other reasons. Because if you have a capital asset, you can sell it off or you can sell it out at a certain point of time. Then you will be gaining capital gain. You will be earning capital gain. You will obtain capital gain. So in order to obtain the capital gain, you have to identify an asset to be capital asset. If there is no capital asset, there is no capital gain. In order to determine the capital gain, you need to identify an asset to be the capital asset. So if you go to section 31, it means that it is determination of capital gain or imposition of tax on capital gain. So which are the capital assets? You have to identify the capital assets, because afterwards you have to identify or calculate the capital gain. If there is no capital asset, there is no capital gain. So if there is no capital gain, there is no tax on that asset. So you have to know what are the capital assets. So the definition says that capital asset means property of any kind. Whether or not connected with the business or profession, but does not include. It might be of any asset. It might be any asset, whether connected with the business or not. But it will be. It will include some of the assets, but does not include any stock in trade, consumable stores or raw materials held for the purpose of his business or profession. So the capital asset will not or shall not include the stock in trade. Consumable stores, whether those are raw materials or not, but those raw materials are held for selling out afterwards, and those will not be included in the capital asset, because you have got raw materials, you have got consumable stores, etc., etc. Those will be used in the business for manufacturing purpose or for directly sale as goods. So those are not treated as capital asset. And personal effects, these will also not include personal effects. Personal effects means those assets which are movable and which are not connected to your business or profession. Say, for example, you have got jewelry, you have got amenities like refrigerator, freezer, television, LED, air cooler, air conditioner, etc. All these might be in the possession of you in your residence, but these are not actually capital assets because these are movable assets and these are not connected to your business. So these are called personal effects. You are using them for your own purposes, or you are using them for the purposes of your family members. So that's why they are not capital assets. So what we can conclude is that capital assets may or may not be connected to the business or profession, but it could be of any kind, but not include, will not include raw materials, consumable stores, stocks, etc. But stocks and shares, that means shares of companies or stocks of companies, those will be treated as capital asset. Those are not general stock in trade. So those are different things. So these are actually capital assets, but personal effects will not be treated as capital assets. So I believe you have understood it. And just excuse me for a moment. I just make a phone call. Okay. Okay. Okay, sorry. Then you come to the definition chartered accountant. So you are going to be a chartered accountant in the very near future. So what does it mean? It means a chartered accountant is defined in the Bangladesh Chartered Accountants Order 1973, Presidential Order number 2 of 1973. You should always remember this, that the Institute of the Chartered Accountants of Bangladesh, that has been formed under the Presidential Order number 2 of 1973. So which is called actually Bangladesh Chartered Accountants Order 1973. This is very important for you to remember. Okay. Then you come to the point commissioner. So when you say commissioner, or when somebody says commissioner, so there could be different meanings of commissioners. Maybe a ward commissioner, or maybe an election commissioner, or maybe a commissioner in the anti-corruption commission, something like that. But here, when you hear commissioner, it means that a commissioner means a person appointed to be a commissioner under Section 3 of the Income Tax Ordinance 1984. So he is a commissioner of taxes. So you will always remember that commissioner means a commissioner of taxes under the Income Tax Ordinance 1984. And when somebody or some officer holds the current charge of a commissioner, he will or she will also be treated as a commissioner of taxes. And that is also under section 3 of the Income Tax Ordinance 1984. Okay. Then come to the definition commissioner appeals. So earlier I have told you commissioner. So commissioner is generally in charge of a zone. Zone means an area, and he is responsible for realization of revenue, realization or collection of taxes, and to administer the zone. So the primary purpose or the main purpose of his zone is to realize taxes. And government makes the budget every year, and government actually depends on the collection of revenue, special income tax, VAT, customs duty, etc., etc. So the commissioner taxes is responsible for collection of income tax. He is in charge of a zone, and he has got some budget from the National Board of Revenue that something like this, that you have to realize taka 500 crores or 1000 crores within this year. So this is your budget and you have to meet the budget. So this is the function, primary function of the commissioner of taxes. But if you go to the definition, commissioner appeals, so means a person appointed to be a commissioner of taxes appeals under section 3 and includes the person appointed to hold current charge of a commissioner of taxes appeals. So meaning that a person who is appointed to be a commissioner of taxes appeals under section 3, he is the commissioner of taxes appeals, and also the person who is currently holding the charge of a commissioner of taxes appeals. He will also be treated as a commissioner of taxes appeals. So his function will be to hear the appeals. When a person or a company or a firm is aggrieved with the decision of the Deputy Commissioner of Taxes, he or she or it can prefer an appeal before the Commissioner of Taxes appeals. The Commissioner of Taxes appeals will hear the cases and give a decision on the arguments given by the SSE. So the Commissioner of Taxes is not in charge of a zone for realization of revenue. So he is of course in charge of a zone, but his primary function is to hear the appeals. That is the cases preferred by the aggrieved taxpayers. Then come to the definition company.
What is the
Earlier we discussed Bangladeshi company. Now we are saying company. Company means a company as defined in the Companies Act 1913 or Company Ain 1994. So a company should be formed under Companies Act 1913 or Companies Act 1994 and includes a body corporate established or constituted under or by any law for the time being in force. We told you about this before. Any nationalized banking or other financial institutions, insurance body, and industrial or business enterprise. So all these will be included in the company, in the definition of company. And an association of or combination of persons called by whatever name, if any of such persons is a company as defined in Companies Act 1913. So if there is an association of persons, there might be persons, but it may be individuals, but there could be an individual and a company. Both of them can join together and can form an association of persons. If it is so that you find one person as a company in the association of persons, in that case, this will be treated as a company. But if there are only individual members in the association of person, then it will be treated as an association of person, not a company. So, and any association or body incorporated by or under the laws of a country outside Bangladesh. So, if there is an association or body incorporated by or under any law of a country outside Bangladesh. So if you find one association here, or if you find a body corporate here, but it is incorporated not under the Companies Act 1913 or 1994, rather that is incorporated in another country. So in that case, it will be treated as a company in Bangladesh for income tax purpose. Then any foreign association or body not incorporated by or under any law, which the board may, by general or special order, declare to be a company for the purposes of this ordinance. It means that if you find one foreign association here or a body, but this is not incorporated by or under any law, this is not incorporated here, in that case, the board may recognize it as a company. Say, for example, buying house. There is a buying house here, which is actually not doing business itself. Rather, it is helping the importers and exporters, importers of another country. So an importer of a particular country can engage some people here as buying house because they will be working on their behalf. They will finding out some, products, say garments items. They will find out which company is good, which company can supply the products in due course. So they are entrusted with these kinds of responsibilities. And in this case, this is not a company which is not incorporated in Bangladesh or incorporated in any other country, but the National Board of Revenue can treat them as a company because they are foreign. So they are an association or they are any body, that those could be treated as companies for the purpose of income tax. The board can do that. You should remember. Then come to the definition, cooperative society. So cooperative society means a cooperative society registered under Samabay Samiti Ain 2001 or under any other law for the time being in force governing the registration of cooperative societies. So cooperative society, you can understand that this is actually regulated or formed under the Cooperative Societies Act 2001. So how can you form a cooperative society? It could be by the all rice manufacturers, rice growers, or all the people who are engaged in milk business, who have got cows, etc., and they can produce milk and can sell the milk through the cooperative society, something like that. They are the members of the cooperative society and supplying the milk together in that society, and the society is responsible for selling the milk on behalf of the growers or producers. So in that way, it should be a cooperative society under the Cooperative Societies Act 2001. Then come to the point, cost and management accountant. Who is a cost and management accountant? You are a chartered accountant, but there are some accountants which are called cost and management accountant. Means a person appointed to be a cost and management accountant as defined in the Cost and Management Accountants Ordinance 1977. So the Cost and Management Accountant Ordinance 1977, it gives us the definition of the cost and management accountant. So this is an ordinance, it is not a presidential order. As in your case, you have got the Chartered Accountant Order 1972, Presidential Order number 2, 1970. This is 1973, I believe. Yes. Yeah, 1973. But in this case, the cost and management accountant, it is actually regulated by the ordinance 1977, Cost and Management Accountant Ordinance 1977. So that is little bit different. And then come to another point, dividend. Dividend, this definition is very much inclusive, because you cannot say that this is dividend, this is not, something not like this, but basic thing remains the same. What is dividend in general? If I ask you what a dividend is, what would be your answer? Any idea about that?
General definition may be the distribution of profits to the owners of the company.
Owners means shareholders.
Yes.
Yeah. So this is actually in case of companies, and you have to distribute the profit among the shareholders. So what kind of profit it would be for distribution? Whether this is a pre-tax profit or after-tax profit?
Profit after tax.
There should be after-tax profit. So you have to pinpoint this, that this is the distribution of the after-tax profit, which is the retained earning of the company. So that is for distribution to the shareholders, which is actually decided in the annual general meeting of the company. What percentage of dividend will be given to the shareholders? It could be 5%, it could be 1%, it could be 10%, it could be 30%, whatever it is. But it should be decided in the annual general meeting of the company. So you can distribute after-tax profit among the shareholders. You can distribute right shares among the shareholders. You can distribute stock dividend among the shareholders. That means bonus shares among the shareholders. All these will be treated as dividend. Bonus share is a dividend, but right share, that is different thing, because you have to pay for it. It is not in lieu of your investment already made, but this is a right. That is, you have been given a right to holding some new shares issued by the company. You can say that any distribution by a company of accumulated profits. whether capitalized or not. If such distribution entails the release by the company to its shareholders of all or any part of its assets or reserves. Meaning that sometimes you have got accumulated profits, it is not actually distributed. So you have made a profit this year, you have paid taxes on that, but you did not distribute that amount among the shareholders. So it might be capitalized or it might not be capitalized. So whatever it is, after 2 or 3 years or 4 years, if you make a distribution and if you distribute the accumulated profit, any part of it, among your shareholders, it will be treated as a dividend. So this is very important to remember. And then by any distribution by a company to the extent to which the company possesses accumulated profits, whether capitalized or not, to its shareholders of debentures, debenture stocks or deposit certificates in any form, whether with or without interest. So if you make a distribution to the extent to which the company possesses accumulated profits. So the most important thing to remember is that you have to distribute the money among the shareholders to the extent to which the accumulated profit is there. It should not exceed the amount of the accumulated profits, but it should be limited to the accumulated profits. Maybe you have got accumulated profits of 5 crores of Tata and you have distributed dividend at 3 crores of Tata. So it is within the limit, within the accumulated profit. But if you distribute 6 crores of Tata, it means that it's not dividend. 1 crore is not dividend. Up to 5 crore, it's dividend because this is limited to the accumulated profits. So this you have to remember. Any distribution by a company to its shareholders on the reduction of its capital to the extent to which the company possesses accumulated profits, whether such accumulated profits have been capitalized or not. It means that when you are reducing your capital by giving a distribution to its shareholders, it could also be treated as a dividend. But that amount, which is the reduction, which relates to the reduction of the capital, should also be limited to the accumulated profits, because there was an accumulated profit and that accumulated profit was added to the capital. Now you are reducing the capital, but when you are making the distribution, it should be that the distribution is not beyond the accumulated profit which has been capitalized. Then any profit remitted outside Bangladesh by a company not incorporated in Bangladesh under Company Ain 1994. So when a company actually remits money to another country and the company is not incorporated in Bangladesh under Companies Act 1994. So this company, since it is not incorporated in Bangladesh and it has remitted money outside of Bangladesh, so that remitted money would be treated as dividend. So that is another definition of dividend. Another definition is any distribution of profit of a mutual fund or an alternative investment fund. So you could buy fund, mutual fund, or alternative investment fund. And if there is a distribution of profit under that fund, that will also be treated as a dividend. It's very natural. Because profit will be earned by the mutual fund and profit will be earned by the alternative investment fund, and if there is any profit, and that profit could be distributed among the holders, so that profit would be treated as dividend. Then another important definition of dividend is any payment by a private company of any sum uh, by way of advance or loan to its shareholder, or any payment by any such company on behalf or for the individual benefit of any such shareholder, to the extent to which the company in either case possesses accumulated profits. So if there is a payment by the company, by a private company of course, not a public company, private company, of any sum by way of advance or loan, I am just giving a loan to the director maybe, and this is in the form of loan or in the form of advance. It could be to a shareholder, it could be to a director, and it could be in the form of an individual benefit. To which, to the extent to which the company possesses accumulated profits. So I am giving an advance to a particular shareholder or particular director, or a loan to a particular director or shareholder for his individual benefit, because he needs that money. He has actually approached me for that money. Now I am giving him that money. But when I find that this amount which I am advancing him or which I am giving him as a loan is within the limit of the accumulated profit earned by the company, if it is within the limit of the accumulated profit, then it will be treated as dividend. In case of private company, of course, you should remember that this is in case of a private company. But whatever we have said up to now, the dividend does not include a distribution made in accordance with subclause C or subclause D in respect of any share, including preference share for full consideration, or redemption of debentures or debenture stocks, where the holder of the share or debenture is not entitled in the event of liquidation to participate in the surplus assets. Now, if there is a distribution to the preference shareholders or debenture holders, especially at the time of liquidation, if they are not entitled to participating in the surplus assets, so in that case, payment to the preference shareholders and debenture holders will not be treated as dividend. Although this is a distribution, but this is not to be treated as a dividend. Any advance or loan made to a shareholder in the ordinary course of its business, where the lending of money is a substantial part of the business of the company. When the business of a company is lending money to others, and in that case, the ordinary course of business, so this is the business, and as a part of the business or as ordinary course of business, I am advancing an amount of money to a shareholder or to a director, whatever it is. In that case, it will not be treated as a dividend, because this is the normal course of business of the company, advancing money or lending money to others. Then any dividend paid by a company which is set off by the company against the whole or any part of any sum previously paid by it and treated as dividend within the meaning of subclause E to the extent to which it is so set off. So any dividend paid by a company which is set off. So dividend has been paid by a company and this is set off by the company against the whole or any part of any sum previously paid by it. That means the person paid it to the company and now the company is returning it against that money received by the company. So this will not be treated as a distribution made by the company to that person concerned. So it will not be included as a dividend. Then any bonus share issued by the company. If a bonus share is issued by the company, it will not be treated as a dividend because it has been restricted in the income tax ordinance that bonus share is not to be treated as dividend. Uh, it is an asset, capital asset, because they are getting the shares of the company who are given bonus shares. So since you are getting capital asset in the form of bonus share, it will not be treated as a dividend. So that's why it has been restricted. Okay. Now, you can come to the definition employee. Who an employee is. This is in relation to a company. If it is so, if it is in relation to a company, it will include the managing director or any other director or other person who, irrespective of his designation, performs any duties or functions in connection with the management of the affairs of the company. It means that the managing director could also be treated as an employee, and the director, the manager, or any other person who is responsible for performing any duty in the management will be treated as an employee for income tax purposes. Then you come to the definition of fair market value, which means in relation to a capital asset, the price which such asset would ordinarily fetch on sale in the open market on the relevant day. And where such price is not ascertainable, the price which the Deputy Commissioner of Taxes may, with the approval in writing of the Inspecting Joint Commissioner of Taxes, determine. That means fair market value, this is in relation to a capital asset, and it would be the price which such asset would ordinarily fetch on sale in the open market on the relevant day. That means when you want to sell the property on a particular day, it should be sold out in the open market, and the price which it could fetch on that day in the open market would be treated as a fair market value. The residual value received from the lessee in case of an asset leased by a financial institution having license from Bangladesh Bank or on termination of lease agreement on maturity or otherwise subject to the condition that such residual value plus amount realized during the currency of the lease agreement towards the cost of the asset is not less than the cost of acquisition to the lesser financial institution. So this is in case of leased out property by a financial institution. and the residual value should be determined, and that should be in addition to the amount realized during the currency of the lease period. Whatever amount has been realized during the currency of the lease period plus the residual value, both of them should be added together, and it should be the fair market value of the financial institution. So these are actually not very common in general cases. Rather, it is in lease agreement, a list of property and by financial institutions, etc. So sometimes you can find this kind of definition. What would be the fair market value in that case? But generally, fair market value would be the value which it would fetch on a particular day on sale in the open market. So that is the fair market value. And then come to the definition of firm. Firm means the partnership firm. Sometimes chartered accountants firms are called firms. An individual running a chartered accountant firm will also be called a firm, but actually in the true meaning of the firm, it is not correct, because firm has got a special meaning, and the firm is actually regulated under the Partnership Act 1932. So the Partnership Act 1932 says that there should be more than one partner, that means at least two partners, and there should be at best 20 partners in a partnership firm. So it should be under the Partnership Act 1932, and the definition is the relationship between the persons who have agreed to share the profits of a business carried on by all or any one of them acting for all. It means that the members, that is the partners of the partnership firm, would join in carrying on the business. All the partners, or one partner would run the business on behalf of all the partners. But there should be an agreement among the partners, and it is a relationship between the partners who have agreed to share the profits of a business. They will share the profits of the business according to their agreements, and there should be some percentages which will be shared, percentages of profits which will be shared among themselves. So the definition you should know under the Partnership Act 1932. You should also remember that the partnership agreement is formed under the Partnership Act 1932. And there are some firms which are registered, and there are some firms which are not registered. If a firm is registered, it should be registered under the Partnership Act 1932 by the Register of Joint Stock Companies and Firms. So the Register of Joint Stock Companies and Firms is responsible for registering the partnership. So this is important for you. And if there is unregistered firm is not actually registered with the Register of Joint Stock Companies and Firms. So you can just make an agreement among yourselves, and you can form the partnership and you can run it. Then you come to the definition of income. What is an income? If I say income, what does it mean? What do you understand by income? Any idea about the definition of income? Anybody from the participants?
Yes, sir.
Yes, please tell me what should be income.
Sir, income means the money received, especially in a regular basis, for work or through investment
Money received in regular
basis.
basis.
For work, regular basis for work or through investment.
If you say money received, so if I do a business, if I sell my stocks or a manufactured product, I will be receiving money. So the sale proceed, would it be treated as an income or profit?
Sir, income, not profit, exactly. Incomes. Income, sir.
Incomes or profit, those are not actually sales. So
Not sales.
when
Sir.
you are receiving proceeds from your sales, that's not your profit.
Not exactly profit, because it is received revenue income, and after deducting cost of goods sold or any other cost, gross profit, operating profit, that is, it might be different to income.
Yes, so that is true, because income could be profit, but it has got some intricacies. That means any income, profits or gains from whatever sources derived, chargeable to tax under any provision of this ordinance. If you have income, if you have profit, if you have gain, which are chargeable to tax under this ordinance. Under this ordinance means under the Income Tax Ordinance 1984. Those will be your income. So income could be income, income could be profit, income could be gain. But they should be chargeable under the Income Tax Ordinance 1984. And any amount which is subject to collection or deduction of tax at source under any provision of this ordinance. If you receive something, if you have any income or earning, and if it is subject to deduction of tax at source, then it would also be treated as an income. So you are getting your salary from your employer, and when you are paid your salary at the end of the month, a certain percentage of tax is deducted from your income. So that is, tax deduction at source. You are receiving something or you are being paid something, and they are deducting tax under this ordinance. So in that case, this will be your income. So any loss of such profit, gain, or income. So we have said about the income, profit, or gain, and we thought that all these are actually positives. But it might not be positive. They might not be positive. They might be negative. Negative in the sense that when you are making a profit, it's a positive and it's profit. But when you are incurring a loss, if you incur a loss, that would also be treated as your income or profit or gain. But it's a negative income, negative profit or negative gain. So this is also to be treated as income, because under this ordinance 1984, it will also attract some proceedings under the income tax ordinance, because if you also incur a loss, you have to submit the return, and then an assessment would be made by the Deputy Commissioner of Taxes. The profits and gains of any business of insurance carried on by mutual insurance association computed in accordance with the paragraph 8 of the fourth schedule. So this is in relation to the insurance companies, mutual insurance association. So if you go to fourth schedule and paragraph 8, you will understand what the mutual insurance association does. So they also make some profit, they also gain some loss, etc. But according to the schedule, what they are doing. So that's the mutual insurance association, and they are also making some gains or profits, etc. Then any sum deemed to be income or any income accruing or arising or received or deemed to accrue or arise or be received in Bangladesh under any provision of this ordinance. So if an income is accruing to you, that means you are staying outside of Bangladesh, but there is a house property income in this country or agricultural income in this country, and this income is being accrued, although you are not staying here. So in that case, that will also attract tax in Bangladesh. Then an amount on which a tax is imposed. If there is an amount on which tax has been imposed, it might be any amount on which tax has been imposed. So since tax has been imposed on an amount, that amount would be treated as income, as an income or as a profit. And any amount which is treated as income under any provision of this ordinance. So under any provision of the Income Tax Ordinance 1984, if any amount is treated to be income, whatever it is, any kind of income could be treated as income under this ordinance. So that could also be income or profit or gain, and that could also be taxed. Okay. Then come to the definition interest. What is an interest? How do you define interest? You tell me whether you need any break at this point of time. I'm not sure when you need a break.
So regularly we got 10 to 15 minutes.
Sorry?
Regularly we got 10 to 15 minutes back during this.
Okay,
session.
when? Now? Is it now?
Maybe, sir.
Okay. Okay,
Middle of
then after 15 minutes we come back
Okay.
and resume. Okay.
Okay.
trying to discuss interest. What interest means? Interest means interest payable in any manner in respect of any money borrowed. If you borrow money from the bank, you have to pay interest. That means you have to pay the charge on the amount, which is the cost of capital. So there is the cost of capital, which is being charged on you, or debt incurred, and includes any service fee or other charge in respect of the money borrowed or debt incurred, or in respect of any credit facility which has not been utilized. It means that when you are borrowing money from a bank or from any other institution, you have to pay some charges or fee, and that fee or charge would be treated as interest on the borrowed money. That means you have incurred a debt. When you borrow money, you have incurred a debt. And if there is a credit line, of course, you can utilize the credit line, and then you can pay the charges or fees. Even if you haven't utilized the credit line, you may be charged a particular portion or particular percentage as the fee. So since the facility is allotted to you, so if you can avail of the facility anytime, they will be bound to give you the loan or the credit facility. And for that reason, you have to pay a certain percentage of that. When you are availing of the credit facility, you have to pay interest. But even if you do not avail of the credit facility, but since you are entitled to having the credit facility, then you will be charged a certain percentage of it as fee. So that will also be treated as interest. And that interest will be charged in the profit and loss account against the revenue. Then come to the point, market value. What is the market value? It is in respect of an agricultural produce. So market value means when you can sell the product in the open market on a particular day, the amount which it will bring or it will fetch being produced in the open market. So it could be price which the public would offer on a particular day or on a particular date. And agricultural produces could be sold out in raw form or could be in processed form. So if you grow rice, say for example, if you grow paddy could be sold out in the raw form without being husked. You should not husk it, rather you can sell it in the open market after just drying it in the sun. So it is being sold in the raw form. Or if you convert it into another produce or another processed item, say for example, you have grown paddy, but you have converted it into rice after husking the paddy. It means that it is processed. You have put it in the machine and then you have husked it. So the agricultural produce could be sold out in the market in raw form or in processed form. Whatever form you are selling it in the market, that could bring you some benefit, some revenue. So the expenses of your cultivation that could be deducted from your sale or the revenue, and the fertilizer you have used, the water you have used, the electricity you have used, the wages you have actually given to the workers, day laborers, etc. All those could be deducted from your revenue, and then you can arrive at the income from agriculture. So generally, the farmers they do not keep books of accounts. So in the absence of books of accounts, generally what we do is that whatever produces you have obtained and sold in the market, 60% of the sale price would be treated as production cost. So if you have grown paddy and you have sold them out, say for example, taka 800, you are selling the paddy at, and it could be for 5 or 6 acres of land or 10 acres of land. So if you have 10 acres of land and if your production is 40 acres, 40 months of rice per acre, you can calculate the selling price of the paddy, and then you can deduct, say, 60% of your revenue as the production cost. Afterwards, you can reach or come to the net income from your agriculture. Under section 26. So remember that when you are going to calculate agricultural income, it should be under section 26. Okay. Then let us go to the perquisite. You have heard of it, perquisite, meaning that you are earning salaries, wages, etc. from your employer. So if you are working with an organization, you will be given salaries, allowances, festival allowance, maybe medical allowance, maybe conveyance allowances, etc. So we say that you are having your salary and emoluments from the employer. But there is a term which is called perquisite. You are also earning perquisites from your employer. So what are the perquisites actually? You have to know what are the perquisites. So the definition says that perquisite means any payment made to an employee by an employer in the form of cash or in any other form, excluding basic salary, festival bonus, incentive bonus, not exceeding 10% of disclosed profit of relevant income year, arrear salary, advance salary, leave encashment, or leave fare assistance and overtime, etc. So these will not be included in the pay and allowances as perquisite. The perquisite may be a payment, any payment to an employee by an employer in the form of cash or in any other form. But it will not include the basic salary, the festival bonus or festival allowance, an incentive bonus, arrear salary, advance salary, leave encashment, or leave fare assistance. All these will not be included. Will not be included in the perquisite. But other things, if there is any, say medical allowance, say conveyance allowance, say electricity bill, say telephone bill, etc., all these will be paid to the employee by the employer. In that case, these will be treated as perquisites. And any benefit, whether convertible into money or not, provided to an employee by an employer called by whatever name other than contribution to recognized provident fund, approved pension fund, approved gratuity fund, and approved superannuation fund. That means if there is any benefit given to the employee in whatever way, in whatever name, whether it is convertible into cash or not, that will also be treated as perquisite. But contribution to the provident fund will not be treated as perquisite. Contribution to pension fund, that will also not be treated as perquisite. And contribution to approved gratuity fund, that will also not be treated as perquisite. So some benefit is given. I told you before that the electricity bill, telephone bill, etc. Of your house, that is paid by the employer. So the employer is not paying you cash in order to make the payment of the bills. Rather, the bills are directly paid by the employer. So in that case, these bills which have been paid off by the employer will be treated as your perquisite. If the expenses of education of your children are borne by the employer, that will also be treated as perquisite, because it is not actually paid in cash to you. Rather, it is paid directly by the employer to the school or college or university. And sorry, in that case, that will be treated as perquisite. Okay. Any question? House rent. Yes. If you look at the definition, it is said that excluding basic salary, festival bonus, incentive bonus, not exceeding 10% of the disclosed profit of relevant income year, arrear salary, advance salary, leave encashment or leave fare assistance, and overtime. So these are excluded. But other things, if you have house rent allowance, medical allowance, conveyance allowances, etc., all those will be treated as perquisite. Okay.
Sir, I have a question, sir.
Yeah, please.
A employee, sir, certain period, employed, is he regarded employed?
For certain period.
Yes, sir.
Yes, if you are appointed as an employee of that organization, say for example, you have been given an appointment letter, and from the date you have joined the organization, you will be treated as an employee. If you work there for 1 month, yes, you are an employee. If you work there for 1 year or 10 years, you are also an employee. So you are under an agreement, you are under an appointment letter, and you have got some conditions to join the organization and work for the organization, and you will be given some wages or salaries and other allowances. So under those conditions, definitely you would be treated as an employee. Okay.
Yes, sir.
Yeah. Okay, then I come to definition which is called person. I believe we discussed it before, but again, since it is in alphabetical order, it has come to our notice that person includes an individual, a firm, an association of persons, a Hindu undivided family, a local authority, company, and any other artificial juridical persons. All these will be treated as person. So person does not mean an individual, rather it includes everything, whatever we have said now. Then come to the definition, profits in lieu of salary. Profits in lieu of salary means it is not salary, but it is in lieu of salary. So what does it include? It includes the amount of compensation due to or received by an associate from his employer at or in connection with the termination of or the modification of any terms and conditions relating to his employment. So it means that when I am terminated from my service, the employer can tell me that, okay, your service is no longer required by me, Hence, you are terminated from your service. But you will be given an amount of money as compensation for the termination of the service. So, for example, Taka 5 lakh will be given to me for the termination of the service. So, if I receive Taka 5 lakh, it will be treated as profit in lieu of salary. So, this will be part of my salary, but this will be treated as profit in lieu of salary since my service has been terminated by the employer. Or if there is a modification in the terms and conditions of the service, if I am in agreement with the employer, I have got some terms and conditions to comply with, and if there is a modification, and because of the modification, if I lose a benefit or I incur a loss or my benefit is reduced, and for that reason, if I am paid an amount of money as compensation, so in that case, this compensated money or the amount of compensation would also be treated as profit in lieu of salary. So that will also be taxed. Then, any payment due to or received by an assessee from a provident fund or other fund to the extent to which it does not contain or consist of contributions by the assessee and
স্যার কই গেল? ওখানে কারেন্ট চলে গেছে।
স্যারকে শুনতে পাচ্ছেন আপনারা?
Can you hear me?
Yes, sir. Yes, sir.
Okay, it went off actually. So what we were discussing is that profits in lieu of salary. So when your service is terminated, and if you are given an amount for compensation of the termination of the services, that will be treated as profit in lieu of salary. Or if there is any modification in the terms and conditions of the agreement, and if you lose something, or if you are deprived of your benefit, or if your benefit is reduced, and for that reason, if you are given a compensation amount, that will also be treated as profit in lieu of salary. Or again, we told you that when a payment is due to or received by an assessee from the provident fund or other fund to the extent to which it does not consist of contributions by the assessee, and the interest on such contribution, meaning that when there is a provident fund, you are making a contribution to the provident fund, and interest is being accrued on that contribution. So if you receive an amount from the provident fund, and if that amount is more than the amount you have contributed to the provident fund and the amount of interest accrued on it. So for example, you have contributed Taka 10 lakhs and Taka 2 lakh has been accrued as interest on that amount. So your total balance of the contributory fund is 10 lakh plus 2 lakh. That means 12 lakh Taka. If you receive an amount from the Provident Fund to the extent of taka 14 lakhs, so it will be beyond the amount of your contribution and the interest accrued on it, 2 lakh taka more. So this 2 lakh taka would be treated as profit in lieu of salary. But the other 12 lakh, that is equivalent to the amount you have contributed to the Provident Fund and the interest that has been accrued on that amount contributed. So that amount will not be treated as profit in lieu of salary. That is, taka 12 lakh will not be treated as profit in lieu of salary. But the other 2 lakh which you have received beyond that amount would be treated as an amount in lieu of salary or profit in lieu of salary. So you should remember all this, because profit in lieu of salary will be taxed by the income tax authority at the time of calculation of your salary and wages, or sometimes at the time of retirement. You are getting some benefits. You are getting pension money, you are getting gratuity money. So if you are getting pension money is not taxable as per income tax ordinance. Gratuity money is also taxable, but certain amount of money is not taxable. If you receive 2 crores 50 lakhs taka, up to that amount, it is not taxable. But if you receive an amount as gratuity money beyond that amount, that is more than 2 crores and 50 lakhs, it will be taxed. So there are some provisions with regard to the exemption or exclusions. So you have to know all this at the time of calculation of salary income. Okay. Then you see another definition, which is recognized provident fund. Means a provident fund which has been and continues to be recognized by the commissioner. Commissioner means commissioner of taxes, in accordance with the provisions of Part B of the first schedule. So if you go to the first schedule, Part B, you will find the conditions laid down for creating a provident fund and also to continue with the provident fund. That would be treated as a recognized provident fund. So if it is to be a recognized provident fund, it has to be recognized by the Commissioner of Taxes. And it has to be continued to do so by the Commissioner of Taxes. You will be able to understand, or you will be able to advise your client how to create a recognized provident fund. Next, come to the definition, resident. Resident in respect of an income year. You understand that there is a difference between a citizen and a resident. If you are a resident in Bangladesh, that is as per immigration law. Citizen, that is also as per immigration law. But here, the resident, the term resident, it is for the purpose of income tax. So there is a difference between the two. A citizen of Bangladesh may not be a resident for income tax purposes, and a resident in Bangladesh may not be a citizen of Bangladesh for income tax purposes. So our matter of consideration is the term resident. Resident should be in relation to the income year. How to determine whether a person is a resident or not? So you have to identify the person, who he is. If he is an individual, you will determine his residence from the viewpoint of an individual. If it is a company, you have to determine its residence from the viewpoint of its being a company. So it also applies to other cases like other persons, Hindu undivided family, or a partnership firm, an association of persons, etc., etc. So with regard to the residence of an individual, how to determine his residential status? If he stays in Bangladesh for a period of 182 days or more in an income year, he will be treated as a resident. This is very straightaway definition. In the income year, which is 365 days, during that period, the person concerned has to be in Bangladesh for 182 days or more. This is one condition. And another condition is there. If you cannot stay in Bangladesh for 182 days or more in a particular income year, then you can comply with the residential status if you have some other conditions fulfilled by you. So what are the other conditions? In the income year, you have to stay here for 90 days or more. Having previously been in Bangladesh for a period of 365 days or more during 4 years preceding that year. So if you stayed in Bangladesh for 90 days or more in the last income year, having previously been in Bangladesh for 365 days during 4 years preceding that income year, so you will also be treated as a resident. And these 182 days or 90 days or 365 days, how to calculate those? If you stay here for 182 days in an income year, it could be at a stretch or it could be in phases. If you stay here for 2 months at a stretch, later on you again going away from Bangladesh, and after 1 month you are coming back to Bangladesh, that could also be possible. So that's why it has been said that for 182 days or more, amounting in all to, that means for a period or for periods amounting in all to 182 days or more. So it should be in all 182 days. So you can join together all the stays, your stays in Bangladesh, and if it is 182 days in an income year, you will be a resident. Other conditions I have told you, 90 days or more in one income year and 365 days during 4 years preceding that income year. So either of the conditions you can fulfill, and in that case you can become a resident in Bangladesh. Then in case of Hindu undivided family, farm or association of persons, the control and management of whose affairs is situated wholly or partly in Bangladesh in that year. So if the person is a Hindu undivided family or a farm or an association of persons, the control and management of its affairs should be situated wholly in Bangladesh. So it should not be controlled or managed by somebody who is not residing in Bangladesh. Its office should be situated in Bangladesh, maybe head office, maybe existence of the business, existence of the management, all those should be in Bangladesh. Then in case of Bangladeshi company, its residential status should be determined, and a Bangladeshi company or any other company, the control and management of whose affairs is situated wholly in Bangladesh in that year. The management and control of its affairs should be situated in Bangladesh in case of company, any company or Bangladeshi company. Then it would be treated as a resident. But whatever you have seen in farms, associations of persons, etc., their management and control of affairs should be partly or wholly situated in Bangladesh. So either cases, they will be treated as residents. But in case of companies, yeah, it should be wholly situated in Bangladesh. It could not be partly situated in Bangladesh. So they would be treated as residents. And in case of a trust, fund, or an entity, the control and management of whose affairs is situated wholly in Bangladesh in that year. So if there is a fund, if there is a trust, if the control and management of whose affairs would be situated in Bangladesh in that year. And a local authority and every other artificial juridical person, they will also be treated as a resident because they are the part of the government and they are under the local law. So that's why they are always resident here. Then you come to another point, which is called salary. What is salary means? What you include as salary. Salary includes any wages or pay. If you are getting monthly pay, it is a salary. If you are getting wages, that is also a salary. Any annuity, pension, or gratuity. If you receive any annuity, that is an annual amount, or a pension, or a gratuity, all of them would be treated as your salary. So what is your pension money? Any idea about that? Do you have an idea of the pension money?
Pension money after retirement, getting retirement every month or every certain period, get some kind of financial benefit from employer after retirement.
Okay. So generally it is at the after retirement, when you retire from your service, you will be getting the pension money. So especially this is very common in case of employees working with the government. So if a government employee retires from his service, he is paid pension money. Any idea how it is determined?
Very complex.
Mm.
I think I knew that because after retirement, that is 80%, starting from 21% to 90%. There is a basic salary, last determined basic salary, 50% of that will be treated as pension.
Yes. When your basic salary, say, stands at 82,000, that is the highest pay of the government, and 90% of that is calculated first. And of that 90% of the salary, maybe 73,000 something, 50% of it will be treated as pension money. That means 36,000 something. So that amount will be paid to you every month as pension money. Okay, so it is not actually taxed. It is excluded from the taxable income, or it is exempted from the taxable income. So you will be getting that benefit without making a payment of tax on that. So if it is 36,800 something, say for example, in 1 month, this is, as you have said, that 50% of 90% of the last basic pay. And the other 50% of 90% of the basic pay, what is that?
We're getting at a time, that is when he retired from his employment, he'll get this the remaining part at a time.
At a time, okay. At a time means, you see, let us suppose, as I told you before, 82,000 is the last pay. So 90% of this amount comes to 73,800.
Into 200 maybe multiplier.
And we have calculated 50% of that as the pension money, 36,900. So the remaining 36,900. So that would be paid to you at a time, but it is not paid to you at a time at 36,900. It is paid at a time 36,900 times 230. So it is 84 lakhs 87,000. So you are
Yes.
getting this
Yes, sir.
amount at a time, and this is called gratuity. So that is the gratuity amount. And I told you before that the gratuity amount is also not taxable up to a certain limit. That means if you receive gratuity amount up to taka 2 crores 50 lakhs, then it will not be taxed. It will be exempted from tax, or it will be excluded from taxable income. So beyond that amount, if you receive something, that will be treated as your taxable income. So this amount you are getting as the gratuity money, and that you can get at a time, and you can invest that amount in any saving certificate or in any other field, whatever you want to. Okay, then we are discussing actually salary, what it includes. And this salary also includes fees, commissions, allowances, perquisites, or profits in lieu of or in addition to salary and wages. And we have told you that perquisites would also be treated as salary, and that will also be taken into account for taxation purpose. And profit in lieu of salary would also be treated as salary. So fees, commissions, these will also be treated as salary. So if you receive salary and the other fees, commissions, etc., altogether, you have to pay taxes on that. This is under Section 21, because salaries and allowances will be taxed under Section 21. And any advance of salary, if you receive an advance of salary, that will also be treated as salary, because during the income year, you will have 12 months period, and you have received your salaries. But if you have received salaries for 13 months, and 1 month salary will be advance salary. So that advance salary would also be included in the income of the year, and that will also be taxed. But in the next income year, this amount would be excluded, because you have already paid taxes on that amount. So you don't have to pay tax again on that amount. And then any leave encashment. If you have any leave, that is the, earned leave. Earned leave, you can accumulate our earned leave. So that is as per provision of the leave rules. Say, for example, if you work with the organization for 11 days, per 11 working days, you will earn 1 day leave. So in the year, maybe you will be accumulating 30 days earned leave. So if you have earned leave for a number of years, and after that, if you want to retire, or if you want to leave the job, then in that case, your leave could be encashed. That means leave encashment. So if you receive a leave encashment, that means if you sell out your leave, which you have accumulated during your service with the organization, that amount would be treated as leave encashment, and which will be part of your salary. So in some organizations, maybe in the private organizations, leave encashments could be limited to a certain period. That means you will be able to sell only 3 months leave, not more than that. But in the government, you can sell 18 months leave. That is possible. So it depends on the organization, wherever you are working with. So if you have that amount of money, say, for example, with the government servant, he can sell out his leaves for 18 months. So 18 months basic will be given to him as leave encashment, and that will be treated as your part of salary. But if the income tax ordinance exempts it from payment of taxes, it could be. But if it is not exempted, then you have to pay taxes on that amount. Then come to the definition, speculation business. What is a speculation business? By business, you have known what a business is. It could be trade, it could be commerce, it could be manufacture, it could be adventure, but with some motive of profit. But if you say speculation business, what is that? Any idea about that? Anybody from your end? No response from your side. So speculation business means a business in which a contract for the purchase or sale of any commodity, including stocks and shares, is periodically or ultimately settled otherwise than by the actual delivery or transfer of the commodity or scripts, but does not include business. It means that when there is a contract for the purchase or sale of a product, including stocks and shares, and it is periodically or ultimately settled otherwise than by the actual delivery of the commodity or scripts. So the delivery of the goods is not taken place, but this is theoretically settled. Even for the scripts, it is theoretically settled, but actual transfer is not taking place. So in that case, it will be treated as a speculation business, but it does not include a contract in respect of raw materials or merchandise when it is entered into by a person in the course of its manufacturing or mercantile business to guard against loss through future price fluctuations for the purpose of fulfilling his other contracts for the actual delivery of the goods to the manufactured or the merchandise to be sold by him. It means that whenever you are in contract with a particular person, say for example, you are a garment manufacturer in Bangladesh and you are to supply products to an importer in the US. So in order to supply the product during a period of contract, you have to ensure the supply of raw materials from another source, because raw material is not available in Bangladesh because cotton is not grown in Bangladesh. So you have to import cotton from other countries, and you can enter into a contract with the cotton manufacturers that he or she has to supply the cotton to you within that period at a particular price or at a particular quantity. Why have you done that? You have done that in order to make sure that you can supply the products to the importer. You have to manufacture the ready-made garments, then you have to export it to the importer. So this is to guard against any rise in price or to ensure the delivery of the raw materials. So if you enter into an agreement like this, then it does not include any speculation business. This is to protect you against any future loss. Then a contract in respect of stocks and shares. is entered into by a dealer or investor therein to guard against loss in the holdings of stocks and shares through price fluctuations. So in case of stocks and shares, if you are in agreement with a dealer or an investor to guard against any loss in holdings of stocks and shares, if you have an agreement with regard to that, that you might face price fluctuations in the business, so you have entered into an agreement. So in those cases, it will also not be treated as speculation business because you have done it in order to guard against any loss or price fluctuations. A contract is entered into by a member of the forward market or a stock exchange in the course of any transaction in the nature of jobbing or arbitrage to guard against loss which may arise in the ordinary course of business as such member. You have heard about forward market or stock exchange. If it is a forward market, you can sell the product in advance or you can purchase the product in advance. So that is also done in order to guard against any price fluctuation or in order to ensure the products in the due amount. So all these are actually against guarding loss or price fluctuations, etc. So if it is so, then it will not be treated as a speculation business, but other things would be treated as speculation business when the purchase and sale of products take place without actual delivery of the commodity or scraps, and that is theoretically done. In that case, it will be treated as a speculation business. Then you come to the definition, tax day. What is a tax day? Any idea about the tax day?
For an individual, tax day will be 13 November, and for a company, after ending of the closing of the accounting year, 7 months after 15 days of 7 months.
Good. So tax day means in case of an SSC other than a company, you will say like that. In case of a an SSC other than a company, the 30th day of November following the end of the income year. So meaning that last June, 30th June, that was the income year. That was the end of the income year, starting from July in the previous year. So after 30th day of June, you will find July, August, September, October, and November. So 30th day of November would be the day which is called tax day. So earlier, this was 15th of September, but now it is 30th day of November. But it could be extended by the National Board of Revenue. But as per Income Tax Ordinance 1984, as amended in every year, it is 30th day. So you have to submit the return before any day of that time or on that day. So if you submit the return on that day or before any day between 1st July and 30th day of November, you can submit your return under the self-assessment scheme, and that is called submission of the return under section 75. That means you are submitting the return when it is due and without having any liability. You don't have any liability for submitting the return. You are not at default. So all the conditions you are fulfilling. But you can say whether after 30th day of November, you can submit the return or not under self-assessment scheme. You have any idea about that, whether you can submit the return under self-assessment scheme after 30th day of November?
There is a provision for time petition.
Mhm.
Time petition 2 months, 4 months.
Yeah.
There's a provision for time petition after the end of tax day.
Okay.
Uh,
So you can
prior, yes, sir.
You can apply for that to the Deputy Commissioner of Taxes for extension of the time, and the Deputy Commissioner of Taxes can extend the time up to 2 months at his own discretion. That
Yes,
means
sir.
he has the authority to extend the time up to 2 months upon receipt of your application. But if you need more time, that is 2 months is not enough for you, then you can again apply for that, or you can apply at a time, that is at one point of time, for 3 months time extension. That is also possible. And in that case, the Deputy Commissioner of Taxes would seek the approval of the Joint Commissioner of Taxes, inspecting Joint Commissioner of Taxes, or inspecting Additional Commissioner of Taxes. And in that case, the Joint Commissioner of Taxes or inspecting Additional Commissioner of Taxes, he is the supervising officer of the Deputy Commissioner of Taxes, and he will approve it in writing. That means a proposal will be sent by the Deputy Commissioner of Taxes for the extension of the time beyond 2 months, and he will approve it in writing. And then the Deputy Commissioner of Taxes will inform the SSC that your time petition has been accepted and it has been extended up to this time. So yes, the SSC can submit the return under the self-assessment scheme still then after the 30th day of November. But is there any loss?
There's a 2% interest.
2% delay interest. 2% delay interest will have to be charged each month, isn't it?
Yes, sir.
Okay, so it is a loss for the SSC. He can submit the return under the self-assessment scheme, but still then he has to pay an additional amount of money apart from his normal tax. So there is a loss for him. So it is better not to get the time extended. Better to submit the return by the 30th day of November. And you have to advise your clients that by 30th day of November will be the appropriate time for you for submission of the return, and you don't have to pay any additional amount apart from your normal tax. So that has to be advised by you to your clients. Okay. So in case of a company, the 15th day of the 7th month following the end of the income year, or the 15th day of September following the end of the income year, where the said 15th day falls before the 15th day of September. So it means that in case of a company, the 15th day of 7th month, 15th day of 7th month means following the end of the income year. So if the income year ends on 30th day of June, then 15th day of the 7th month, that means January, I believe, 15th January, or the 15th day of September following the end of the income year, where the said 15th day falls before the 15th day of September. So it has not fallen before the 15th day of September. So in that way, it will be decided that the tax day, what would be the tax day for that company. So accounting year of the company, income year of the company, that has to be decided first. Then on the basis of that, you have to calculate the 15th day of the 7th month following the end of the income year. So like that, you can calculate if you want to. And another provision is there. The next working day following the tax day, if the day mentioned in subclauses 1 and 2 is a public holiday, meaning that if 30th day of November is a holiday, public holiday, in that case, the next working day would be treated as the tax day. So that's the general provision. So say 30th day of November is a Friday. So next day means not Saturday. Next day means Sunday, the next working day. That would be the tax day for an individual SSC. So these are the meanings of tax day, and you can remember all those because there might be some questions in the certificate level examination with regard to the tax day. And then you come to another definition, which is called transfer. And transfer, why is it needed? Because transfer is always in relation to the capital asset. And you have to calculate the capital gain from the sale of the capital asset. So what does transfer mean? Whether sale is only transfer or any other modes of transfer would be there. So transfer in relation to a capital asset includes the sale, exchange, or relinquishment of the asset, or the extinguishment of any right therein, but does not include. That means if you want to sell it, it is transfer. If you want to exchange it, it is also transfer. Or if you want to relinquish it, this is also transfer. How do you exchange it? I am giving one property to you and you are giving me another property. So this is an exchange. So how to determine the capital gain out of that? Because this is not sale. So capital gain could also be determined out of that. Because when I am exchanging my property with yours, so my property would be valued at a certain price. And I had a cost of acquisition of that property. So after deducting the cost of acquisition from that property, that means from the value of the property, actual sale value of that property, or the price of that property, I can make a calculation of my capital gain. Then with regard to your property, the value of the property could be determined and the cost of acquisition of your property could also be reduced or deducted from the value of the property. So there could be another figure of capital gains. And there is a capital gain in case of my property, and there is also a capital gain in case of your property. So the capital gain could be calculated and it could be taxed. So in that way, exchange is also transfer. Then any transfer of the capital asset under gift, bequest, will, or an irrevocable trust. Does not include, that means transfer does not include any transfer of the capital asset under gift, bequest, or will. If you make a gift of your property, you are gifting your property to your son, to your daughter, or to your brother, etc. In that case, this will not be a transfer for the purpose of calculation of capital gains, because this is without any consideration. And if there is a will means when you are on deathbed, you are trying to transfer the property to a particular person and you are making an agreement. Agreement means this is called will. This is your will, what you want to do or what you intend to do, meaning that after your death, the property will belong to somebody else, belong to your son, belong to your Tata or belong to somebody else. In that case also, you are not getting any benefit or consideration for your property, rather it will be transferred. The right or ownership or proprietorship will be transferred to somebody else. So in that case, it will not be treated as a transfer for capital gain purposes. Another condition is that any distribution of the assets of a company to its shareholders on its liquidation. When the company is liquidated, that means a company is getting dissolved. And in that case, there is a distribution of assets among the shareholders. If it is so, then that distribution will not be treated as transfer. And any distribution of capital assets on the dissolution of a firm or other association of persons, or on the partition of a Hindu undivided family. So if a firm is dissolved, or if an association of persons is dissolved, or a Hindu undivided family is dissolved, the assets will be distributed among the members of the firm or of the AOP or of the HUF. So when there would be a distribution of assets among the members, that will not be treated as a transfer of the asset. So it will not be treated as a transfer for capital gain purposes. So we believe that these definitions are very important definitions for you. And if you have gone through section 2 of the income tax ordinance, you have learned them. But I encourage you to learn the definitions for your exam purposes and also for practical life, because you have to advise the clients accordingly. And if you know all those in detail, you will be able to advise properly. Otherwise, you will not be treated as a very good tax consultant. And chartered accountant must advise the clients with regard to tax, because they say that is a very important part of your job. So if you have any question, please ask me. If not, then we can close it today, and we'll be meeting you again on the next scheduled class. Any question?
No, sir.
Okay.
Sir, I have no questions, sir. Thank you very much for continuing deliberation from your side.
Okay. Is it understandable to you or not?
Clear, sir. Your concept is so clear, and we are privileged to have you.
Okay. Thank you very much. Then we'll be again meeting on this scheduled class later on. Thank you very much.
Thank you very much, sir.
Okay.
Thank you, sir. And Assalamu alaikum, sir.
Thank you, sir.
Welcome.
Assalamu alaikum, sir.